This conference will now be recorded.
Good evening, ladies and gentlemen. It's Clueless Day Trading Frank. It's approximately 8:36 p.m. Eastern Standard Time on December 19th, 2019. This is a strategic midweek update webinar. Session will be recorded and uploaded to the Google YouTube channel for further viewing by all members, as well as free trial subscribers. More importantly, it's available to anybody out there with the internet connection who would like to find out the reality and the precision forecast delivered here at Clueless Day Trading, so they can navigate the markets, bull or bear markets, in this case a bull market, for their own personal gains and their profits. On that note, we shall begin. Full disclosure, this is purely for financial education, not for any solicitation or advice, and welcome. We have some members filtering in. I know it's a exhausting week, so I don't blame anybody for, personally, I'm pretty exhausted right now from all the hard work and the content that's delivered. Huge profits delivered almost every single trading day. And so that's how we are. Hey, Paul, we have Paul here. Paul, you connected?
Yes, Frank.
Oh, there you go. Nice hearing your voice, sir. Paul is a new member who joined us recently and has been diligently following our forecast, as well as utilizing his own resources and experience in navigating the markets. And I'm sure you're on top of the game. So obviously, congratulations for that. On that note, let me just cover a couple of points here. We have come through very volatile and tumultuous times in the US financial markets and the global financial markets. And what you're seeing behind you is a depiction of the stock market going all the way back from the beginning of 2019, right there. Okay, and this is where we are. So the constant thing that we keep on hearing about from the pundits and people who are RET or retail emotional traders, as well as the pundits from Wall Street, analysts out there, and blah, 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 that the markets could never go higher, whether it's for political reasons or economic reasons or credit reasons, bond deals, inverted yield curves, political reasons like President Trump impeachment. The trade deal will never get done. Companies will never make money. We are going into a recession, blah, blah, blah. Let me just state something very clearly. Every one of them have been dead wrong. Now, overall, we have been dead right. And it's a fact. If you don't believe me, not that I really care about, because I don't need to prove my merit, is go back and listen to my video cast from the worst times in the market, which I would say were down here in April, October 2019, first week of October 2019. These triple bottoms, which were extremely volatile times, 600 points up and down, starting off on August 6, 2019. I'm giving you the bottom date, the dates when the markets basically had that hammer reversal: August 15th, August 6th, August 23rd, June 3rd, 2019. Go back and listen to the videos. Listen to what we said. We're not avid, crazy, buy the effing dip type of stupid traders. We are tactical precision traders who like to keep our emotions, like to suppress our emotions as much as we can, and look at the markets in a very robotic and technical way. And so far, it's worked out great. I've been doing this for a lot of years. Just because somebody trades for a lot of years doesn't make them a better trader. What makes people great traders or consistently successful traders are the ones who learn from their mistakes. They learn from their mistakes, they realize what they're doing, they try to understand the dynamics of the market, they like to see what the pattern symmetries are, they focus on the technicals, they try to understand everything that I'm putting out there, and then using their own intellect and their own instincts, act on it. That's what makes a great trader. And what I find almost every single time, specifically on climactic market bottoms or during times of massive volatility, and I'm circling those points in the months of October, even recently in the month of early December, late November, early December, that's where you see the big fat red candles, is that the story always remains the same. And what is the story that remains the same? Well, the story that remains the same, it's always the same. Nobody wants to buy tactical lows because all they're doing is looking at prices. If you're a price chasing old-fashioned legacy trader, and this ain't grandpa's market, you are not going to win in this market. The biggest money is made. And it's the same old story over and over and over again. It doesn't seem to change. It's almost like a behavioral disease. Is the fact that traders keep on doing the same wrong things over and over again. We're in the chase stage right now, which is FOMO, fear of missing out. We're getting to that level where we're going to get a 600 to 700 point drop in the market very shortly. I can predict some dates when we get it. We'll be getting some quick 200 to 300 point pullbacks in the month of December. There are 9 trading days left, so that it'll be quick, but they'll be bought. The real sell-off is going to come around the early part of January, in my opinion. And then the markets will rise again. In my opinion, the markets will not peak till about late February, early March for different reasons, seasonality, um, economic reasons, political reasons, and such. I've talked about this before, and I'm just reminding you guys before that. Now, another thing that I want to mention very clearly, and as I'm talking, I'm going to show you the weekly chart, is as a trader, people think they make money just because the markets go up. Completely wrong. Completely wrong. 100% wrong. We are in the throes of a massive bull market. Yet, if honestly, if you ask yourself, have you really taken full advantage of these massive moves in the market higher? And the answer will be a resounding no. Because in order to be a successful trader, you have to be truthful to yourself. You have to go to confession. Okay? Doesn't matter what religion you are. And the answer that comes back with the voice from the bottom of your heart is no. Now, if you're stubborn, if you're like another one of those traders, okay, there'll always be a next time. Oh, well, I do understand. I'll do it next time. Understanding the markets and understanding all the amazing precision alerts that I put out there is not what's going to make you money. Understanding doesn't make you money. It's the acting on that understanding. The action that you take is what makes you money. Now, some people might say, hey, Frank, that's a lot of philosophical mumbo jumbo, but let me just put it this way. I do this for a living. I have a pretty fantastic life. I can do a lot better. I know that. Okay. I live in one of the most expensive states, one of the second most expensive state in America, New Jersey. High taxes, high property values, high everything. All right. So I think I should know and have a right to say that I know what money is about. Okay. So the fact is that you need to act on, try to do as good as possible and stop being in denial. I know some traders are doing extremely well. I get texts. I'm very open. I keep in touch with as many members as possible. And if some of you do need any type of help on understanding what I'm putting out there, feel free to DM me on Twitter. Feel free to send me a quick email at frank.r@clueless8.com or support@clueless8.com. Okay, some of you have my direct number. You can text me on that. But the fact is that I hear from the ones who are doing very well, and that's great. That's great. Nobody can make money every single frigging trading day. Nobody. I don't care what, somebody say, oh, I make money every day. Okay, great. If you do make money every day, then you're making pennies. The biggest money comes when you are buying these climactic lows, okay, in the markets, and setting up some swing trades, setting up variance trades away from the standard names that everybody's trading, which is Apple, Netflix, Facebook, Roku, Tesla. Amazon's been kind of a laggard, so I'll leave that alone for now. NVDA, AMD, SPY, SPX, IWM, QQQ. Just giving you a partial list. I mean, there's what, 6,000 or more. I don't know the exact number of stocks in the market. We don't cover every one of them. So everyone's used to that. But what about the what about the names that are flying under the radar, not talked about on CNBC and such? Okay, how many times have you seen on CNBC people talk about one of the biggest companies in the S&P 500, Dow Jones Industrial Average, like United Health, Humana, Anthem Health? How many times have you heard them talk about that? I don't think many of you can mention the times. And those have been the biggest winners for us. Even though we don't trade them every day, I've told them they are some of the biggest swing trades ever. And those stocks have gone up like monsters. Monsters. So just trading the Facebooks and the Netflix and stuff and the Teslas, which are on a complete, and I'll talk about that in a minute, breakaway move at this point, is not what a real trader does, in my opinion. It's the one that are flying under the radar, making 52-week highs or coming off the bottom with a lot of upside, are the ones that make you rich. So again, my job is not to change your personality. In that case, I'd be charging you $2,000 a month to be a trading and a behavioral coach. But I like to just share my thoughts. That's all. Saying all that, the next chart we're going to look at as I'm talking is the monthly of the S&P 500 or the E-minis, which is a really big picture. The other thing I want to talk about is this has been the most hated bull market, which you have heard it a couple of times on the media, and I've talked about it for years, since March 9, 2009. And at that time, there was no President Trump. At that time, President Obama was taking over from the climactic, almost depression-like situation that occurred between 2008 2009 because of the massive collapse of the US housing market that took the global economy down. Okay? And since then, it's been a bull market. Let me just point out one thing, and I know politically some of you might like it or not like it. You know where my political leanings are. I've explained it very clearly and been vocal about it on my videos, but this is not a political forum. This is a trading forum. Markets don't give a shit, excuse my French, or a F about who is in power. They don't. Obama, when he was elected, was considered a hardcore community activist socialist. What did the markets do under his regime? Went up 360% or more, if I'm right about the numbers. What did the markets do under Clinton? He's a Democrat. Went up a gazillion percent. The markets accelerated and sped up because they loved the business policies that were and all the right economic policies that were initiated by President Trump. Markets don't give a crap about who's in power. And look at history. Don't listen to me. Whether it's a Democrat or a Republican, as long as they're not in the business of breaking the system, the stock markets will move forward. The biggest determinants of the stock market, the biggest determinant is the Federal Reserve Bank of America, which was highly criticized and still being criticized. And it doesn't matter which administration's in power, okay, about what they do. The Federal Reserve Bank of America is a non-political organization that is in the business of making sure that American business economic policy going forward, they are in the business of managing the monetary policy, the money supply, interest rates and stuff, not the fiscal policy, which has to do with economic policies dictated by the government. And they have been doing it overall right. You know how many times Janet Yellen was criticized, at some points called a socialist, blah, 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 by both administrations, Republicans included? I can't even count the number of times. Listen to my old videos. Go back there. You know, it's all on Google YouTube channel. Clue Trading. She was a great Federal Reserve chairman. So is Chairman Powell. So as long as the Federal Reserve keeps on doing what they do, and they make mistakes, no question about it. They make mistakes. But as long as they're accommodative, which in simple English means they're friendly towards keeping rates low and with a continued focus on making sure the economy keeps on growing. And in this case, Bernanke has made it very clear. He will let the economy heat up before he even heat up quite a bit, i.e. inflation keep on moving up. Inflation hasn't even moved up that much before he even considers raising rates. The markets are going to go higher. So face facts, because as human beings, we are always inclined towards political bias, emotional bias, and all that stuff. Look, I'm 50 plus years old, all right? I probably have more energy than most 20-year-olds out there. You all know that. And I've seen it. I've gone through it. I've lost money. I've made money. And I'm a heck of a lot more informed about the markets, and especially the technical aspect of the market and the fundamental aspect of the market than most of you put together in a bunch. So that's it. So saying all that, we are coming towards the last stretch of the year, calendar year. I think 9 trading days or something like that left. Today's the 19th, so I'm going to do a quick calendar count. We have 1, 2, 3, 4, 5, 6, 7. I think we have like 7 or 8 trading days left. Let me see. 1, 2, 3, 4, 5, 6, 7. We have 7 trading days left as far as my calendar count. 7 trading days left. So what's going to happen? We're going to start a bear market in 7 trading days? Yeah, right. So the key to trading is that not everything goes up every day. So you have to be selective. I try to show selective stocks, both on the fast-moving momentum side, whole bunch of stocks which are still coming off the bottom, what we call, not just reversal trades, but trades that are setting up to move higher. A classic example is Netflix from a couple of weeks ago. Nobody wants to touch Netflix. Oh, Disney's going to kill Netflix, blah, blah, blah. What can I say? I just give the middle finger. I showed you 2 massive falling wedges that encompassed almost 2 years. And guess what happened? Those falling wedges broke out, and Netflix now is going nuts. And it's going to keep on going nuts to a certain degree before it reaches, from a technical standpoint, severe overbought conditions. That, in my opinion, as I've showed you and I showed you tonight, again, we're going to highlight some of those stocks, is probably around 340 or maybe 350. The gap fills. Now, saying all that, one of the things, this is a monthly chart showing you what is really happening in the market, what the long-term traders, i.e. the big mutual funds, the Warren Buffetts of the world maybe are looking at. Warren Buffett should actually subscribe to Clueless Trading, if you ask me. I know that's a very egotistic statement to say, but yeah, we've been dead right. Okay? So the fact is that you've got 9 trading days. January will be rocky. Not right off the bat, in my opinion, but hey, it's going to get there. Even though we have setups for a bunch of calls on the biotech side and such for January 17th, which is the monthly options expiration in January, hey, if conditions start to get rocky and our indicators are starting to slow down or fall, the simplest one to look at is the full stochastics, then we will trim our positions, increase cash levels to a high degree. My cash level it's pretty high still, but but my position level still moderate, is just running like monkeys on a hot tin roof higher, or climbing like monkeys on a coconut tree or something like that. All right, higher. So I have a lot of cash on the sidelines to take advantage of whatever may come. We are reaching technically overbought conditions very quickly, and I've showed that clearly on my S&P E-mini charts, that we probably have maybe 3230, 3240. So if you do the math, that's another maybe 200 to 250 points before we are severely overbought. Emotionally, from a standpoint of what traders are doing, or hedge funds are doing, or mutual funds are doing, who are coming back in the market, we are far from overbought. Because every single time the market jumps up 100 points, today we were up 138 points, the other day we were up 200 points, blah, blah, blah. These candles depict the movements that are happening in hundreds of points. As an average trader who has no idea about the tactical nature of Plutocrate trading, of how to read charts, our structured charts, okay, not just any average chart, they are just taking little slices of profits, or not going there because they keep on telling themselves, oh my God, it's too high, it's too high, it's too high. Well, they said the same thing back in May of 2009, after the markets rallied like nobody's business from March 9, 2009, the ultimate bottom in the US stock markets at S&P 500, 667. And the market jumped up a whole bunch of 100 points. They said, okay, it's over. It ain't over till it's over. The point is, you'll never know when it's over till you look back at it. But we do get technical signals. So let me just get straight to the point. Technically, we are in very extreme overbought conditions. We're getting there, very close to it. Emotionally, and from a behavioral standpoint, we are not, because so much money is still on the sidelines. Look at yourselves. Look at myself. I've been an extreme bull based on what I've seen on my chart for months and months, year after year. But even then, I am not playing 90% offense. I am still playing somewhat defense, taking profits faster, leaving money on the table, but those profits are fantastic. And what a lot of you are doing I don't know what a lot of you are doing, okay? But I do feel that the true bearishness among retail emotional traders is still quite high. So that's all I got to say. On that note, let's dive into the charts. And Paul, if you have any quick questions stuff, feel free to stop me. So we are now hitting I consider it to be the mid channel right here on the monthly chart. This chart goes back to the history of the stock markets from 2007, 2009 bottom, right? 667, 670 on the E-minis. This is what the market's done under previous regimes. President Trump came to power in 2016, right there. The markets dropped, turned around. It was dramatic. Market's all about drama. Okay, drama. So, hey, it's like a soap opera being played out in front of your faces. The thing is, you need to know who the actors are. You need to know what the plot is, and that's what we deliver. Now, one thing I do want to remind everyone, because, obviously I'm not going to sit here and go through every single chart, is my Twitter feed. Plutocrate Trading private Twitter feed is probably, undoubtedly, bar none, compare it to every other trading service that's out there. Come back and tell me. It's probably the most intensive, real-time posts, alerts, actual visual trading charts on markets and stocks that anyone delivers out there. I think I'll stand by it. Okay? If you want to just subscribe to my service just to learn about the US financial markets, forget about trading for a minute. Not that you're gonna that's not gonna help you. That's gonna make, in my opinion, is gonna make you a very decent sum of money. But let's say you're not trading, you just want to learn about the U.S. stock markets. All you got to do is scroll through the say trading Twitter feed. This Twitter feed, okay, this Twitter feed right here, undoubtedly is the biggest educational resource about the U.S. stock markets that you will ever encounter, because it is a real-time diary of everything that is happening in the market on a 15-minute, half an hour basis, going back years and years, since April 15, 2014, since I started my service. Seriously, facts, not fiction. And I'm proud of delivering this type of content. Some people say, how do you do it? You trade your own book, you're dealing with this. Well, it's my profession. It's my job. I do my job very well. Are you doing your job well? That's the question you have to ask yourself. There has not been one single day I can think of that I have completely walked away and the markets are down 6, 7, 800 points. And I said, okay, see you guys later. No, I've walked to all of you and respect it. In fact, don't respect it. Respect it and take advantage of it. That I have guided people through the most difficult aspects of the market. There are alerts, trade alerts, there are visual charts on individual stocks, the VIX, quick, sharp, precise analysis on major economic developments, political developments, so you don't have to scratch your head and think, oh, what does that exactly mean? So that is it. So even if you're not a trader and you want to get a crash course on understanding the US financial market so you can be a much better trader and an investor, remember, you can take these unbelievable educational resource, trading and investing resource, and apply it towards your IRA, your 401k, your long-term investments. You don't need to be a day trader. You don't need to be just a swing trader. So when people tell me, oh, I'm canceling my service because I'm going away for 3 months, I ask them a simple question. What does that mean? You're going away for 3 months. That means you'll be completely cut off the market. But I'm generous enough to leave when people go for short periods of time away from the service, leave the Twitter access open. And I am generous enough to do that. Okay? And not immediately cut them off just because they cancel their service for a temporary basis. And many of you know that. But don't let my generosity fool you, because come the new year, we're going to take some more stricter corporate actions from real estate trading in cutting off the welfare supply chain. How about that? Like President Trump is doing with a lot of abusive welfare in the United States of America. Some of you won't like it. Well, paid members and stuff, it doesn't apply to them. So there we go. So the longer term chart of the markets, higher, higher. Yes, we are reaching some extreme technical overbought levels, but all the technicals still say that we are most probably going to break out. Now, that's not going to happen every 5 minutes. We can easily pull back here, which means that we can easily pull back 400 or 500 points. But as long as these channels remain intact, the bull market is on. I'm not going to get into specific details. I'm just showing you a visual picture. You can see that very clearly. We could do this, drop 600-700 points back to the 3,000 level, which would be 1,400 points on the Dow Jones Industrial Average. Very well could happen, believe me, for many different reasons. 1,400 points from here to here. You won't even see it on the longer term charts. 1,400 points minus 1,400 on the Dow Jones, of course. Okay. The media is going to go back to the same old, oh my God, I told you so. Everyone's complacent. BS. Nobody's complacent. Everyone's crap scared. All right. You all know that. like my friend Paul here who's attending, who is a great supporter of Clue to Say trading. I believe he sees the value in it and mentions it on Stock Twits and many other forums. Listen to Frank. Hey, Frank is no guru, all right? But Frank certainly has learned a lot from the markets to share it with everybody. So I will keep on sharing my wow, W-O-Y, wow, W-O-W, words of wisdom. So we can drop 1,400 points. Markets and the media will go into massive bear mode. We can drop 3,000 points from here to here. Yet the bull market continues because the channels go. Now, as a trader, do you sit around and say, oh, I'm going to just hold my long positions and I'm dropping 3,000 points? Of course not. We're going to take full advantage of it on the pullback via different instruments that we use to short the market, whether it be SPY puts and the indices puts or individual stocks and such. So this is where the markets can come down to 29.53. That's a long way off, ladies and gentlemen, okay? Because we are closed at 32.05. And that's why I'm saying we are short-term extremely overbought. 29.53. That's 250 from here to here. And you can see that is still an acceleration channel. So over the course of the next 60 days, let's just put it this way, or less, we can drop 252 handles on the E-minis or S&P 500 points. I'm going to put SP, convert it by a factor of 8 to arrive at the Dow Jones Industrial Average drop. That comes to, because as a tactical trader, I'd like to show both the downside and the upside. We're not moronic bulls. We are smart bulls based on what we see on the market. We can drop 2,016 points on the Dow Jones Industrial Average. Mark my words. Between now and the month of February. That is what we call words of wisdom. Trade management is key. One of the key things that I said today, right at the market open, is stay selective. Markets are technically overbought. Did everything go up today? Most things did, but certain things didn't. The markets will manufacture another crisis. And the algorithmic high-frequency trading programs would create a 2,000, and it could be a real crisis, but you know, as long as the Federal Reserve doesn't blow up and say, okay, we're going to raise rates like nobody's business, the markets are still going to continue with their bull run. The markets don't care about who's in power. If President Trump, well, the impeachment is a joke. I mean, the Senate's going to reject it. Let's say President Trump was actually impeached and removed from office. The markets will drop 5%. Vice President Pence will take power, and the markets will rally another 5% to 10% from there. That's just the way it goes. Markets don't care who is in power as long as they don't make fundamental changes to the U.S. economic and business system. Even if the ultimate hardcore, well, at least she sounds like that, but I keep on saying I'm from Boston. I know she's a very smart lady. Okay? Smart doesn't mean I support her. I don't. Elizabeth Warren comes to power, markets will drop initially, and then they'll rise. That's just the way it goes. So, saying all that, one of the first things that I said in the markets, that the markets will remain in a tight range all day as marked on ES 15 chart. I said that yesterday, and that movements would come after hours, and that's exactly what happened. And this morning, one of the key things that I said was, and I'm looking this up as I am looking to show it to you guys right here, ladies and gentlemen. This is why it's so important for people. And as long as you have a mobile device and you're connected to the world, the real world, or any world called Earth, As long as you have a wireless signal or an internet signal, you can follow my Twitter feed. You can put any trades through. People say, oh, I'm traveling overseas. So what? You don't have connection on the internet? From here to Timbuktu to Bangladesh to Vietnam, they have faster internet connections than us. Go travel overseas. You'll know. All right? So that's like a bag full of BS excuses. This is what I said. And I'm not a person to keep on dragging on and write long-winded blogs and stuff. I just say it. Expect range-bound trading action all day, which was for the first part of the day till we broke out of the ascending triangle. Want to know all that stuff? It's all on the Twitter feed. Go take a look at it. If you're busy during the day, take a look at it at the end of the evening. Next morning, set up some of the swing trades that I put out there. You don't need to be a day trader. In fact, the biggest money is made on swing trading. People say, oh, Tesla. Well, oh, Tesla. I've been talking about, oh, Tesla. Okay, sounds like a drug commercial, right? Oh, Tesla. Since what? 2 weeks ago? A week ago? You just throw a few calls and leave it in there. Buy one call and leave it in there. And look where you'd be right now. Your whole fundamental view of the stock markets would change. That's a classic example. Same thing with Netflix. Same thing with Apple. Told you guys to buy it a while ago. You don't need to be a day trader. So trader alert, expect range-bound trading action all day. Well, that trading action actually broke out to the upside over the ascending triangle and the upper range. Track ES15 and ES1H chart. Hey, I do all the hard work, show it to you guys. All you have to understand how to read it. It's not that hard, trust me. Even a child can read it. No offense meant to anybody. Okay, so these are the E-mini 15 minutes, E-mini 1 hour charts, which are swing charts for technical levels. Do not force trades. Don't force yourself, oh, I really like this stock. I really need to buy it. No, don't force yourself into a corner. Markets are very overbought. That means technically overbought. Watch the VIX, which I show you to you guys, and you can track that on your side too. Stay selective. Selective stocks. Don't have to go there and buy, you want to buy the overall market, buy the SPY, IWM, QQQ. You want to be selective about the stock, use your own judgment with your own stocks that you like, and my ideas that I'm putting through. Sell profits on multiple trade alert winners. Exactly. When the markets open up and the gap open up 10, 15 handles, or certain stocks are going through the roof, what are you going to do the first thing in the morning? You're going to sit there and say, oh my God, look at all that green on my P&L. Well, all that green on your P&L can disappear in 10 minutes. And you guys all know that. So take profits first, then regroup and get in. That's what I do. If you have 5 calls, for example, or 4 calls, maybe sell 2, maybe sell 3. So you don't have the trader's remorse and looking at it as an algo big sell program comes in for no reason, wipes out all your profits. You're like, holy crap. Okay, that's it. People who want to really learn the skills of trading, what we call trade management, sign up for the advanced coaching sessions. That's all I'm going to say. Being stingy and not spending a few dollars, believe me, I don't overcharge people. To learn that, sit in a group session. I don't like doing private sessions because that takes too much of my time. A group session, which I do sometimes after the market on weekdays and on Saturday and Sunday mornings, depending on the availability. They have huge benefits to how you manage your money. In the meantime, if some of you want to keep on making the same mistakes over and over again and then blaming clueless trading, blaming the markets, blaming President Trump, blaming whatever, your grocery store, that's honestly speaking your business, which I think is losing business. All right, so this looks good. I believe that we are going to see some volatility within the next 100 to 200 points in the market. And if we do break out like a monster, well, God help us. Honestly, the biggest money is not made on jumping on a running train going higher. Yes, it is on certain stocks, but I would like to be a buyer here, 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 instead of trying to jump onto a running, fast-moving bullet train, let's put it that way, as the markets are shooting forward. I don't like it necessarily the market's up every day, even though we have overall long positions. I like markets where we have more cash on the side and they pull back a bit and you buy it and then it jettisons forward like a slingshot. That's where the big money's made. Okay, enough said. So saying all that, here's your short-term chart. This is where we are. I told you this is a big ascending triangle. We break out, and lo and behold, we broke out at approximately 11:15 a.m. Eastern Standard Time, New York time. That's exactly what we did. Here is your ascending triangle for some of you who are, I don't know. I think most of you know that by now. Some of you just don't get it. There's your ascending triangle from the bottom back around the 12th of December, which seems like years ago, right? There's your ascending triangle. We attempted to break out of it. 1, 2, 3, 4, 5, 6. And on the 7th day, God said, freedom, right? We broke out. So where did we break out to? And this, some of you remember, and if you don't, go review the video casts. I told you that on an extreme scenario, and this was the bottom, I mean short-term bottom over the on the 12th at around 8 a.m. pre-market, 8 a.m. pre-market. All right, the market just took off. All about the trade deal and all that stuff. Took off, went up, came down. 50% Fibonacci retest. This is so mathematically precise, these charts and the way I structure it. It's mind-boggling. It is. Am I following it to the teeth? No. I would be the first one to admit that, yeah, I'm obviously good at trading my own charts, but I'm not doing it 100% robotic that I should be. I'm taking profits a little bit too early on certain things. Maybe my position size is a little bit bigger. The volatility is like, say, I'm like, okay, I have money, let me take it down. But I'm trying to improve on it every day. That's the difference between me and a lot of people out there who just don't want to improve. Anyway, I don't want to get into that stuff. So the bottom line is that I said in my previous video, I believe last Sunday as well as last week, that the most we would get to is the extreme Fibonacci level, which is 161.8 or 1.61, 161.8, because this is 100 pattern completion. This is 0 when we were at 3137. So I drew the Fibonacci chart, and I told you that if things go really good with the trade deal, all that stuff, we would get to extreme Fibonacci level. By the way, there are Fibonacci levels above this too that I'm not going to take the time to show tonight. That we would get, but short term, we would get to the extreme Fibonacci level, which would be 1.61, 161.8%. That would be 3215. Well, guess what? We almost hit that. What movie was that? They said, how beautiful is this? How beautiful is this? It sounds like a little mafia movie, right? Like, yo, how beautiful is that? Well, how beautiful is this? I told you we'd hit the upper end of the extreme Fibonacci level, and that's exactly where we are. So I start to basically take profits quicker, run with the high momentum stocks, which still have room to move, Netflix, Tesla, that type of stuff. Amazon told you it'd go to 280. Well, guess what? Amazon went to 281.90. So I'm not chasing, sorry, Apple, 281.90. So I'm not chasing Apple here. I'm like, okay, sit back a little bit. There's so many other ideas. There's so many other biotechs, for example, and some tech stocks too. We have just got the buyout last week on log me in. The next one, in my opinion, is Documentum, DOCU. So, and a lot of other tech stocks way away from the 52-week highs. Let me concentrate on that. That's what I call being smart. So that's exactly what we did. We hit 161.8, almost. Missed it by a hair. 3213.89, and this is 3214.69. I don't think anyone can be as precise as this. And please let me know what are the services that are this precise, not after the fact, but before the fact that this was going to happen. We're in the business of both momentum trading, trading what we see, more importantly, trading what will happen, what we call predictive analytics. I know there's a lot of trading services out there and gurus who will tell you trade what you see. Oh, dude, trade what you see. The algos are so freaking fast, you won't even see what's moving in front of you because they're moving in 1 nanosecond while we're moving in one whatever second if you're that fast, right? So you cannot keep up with the algos. So we try to predicate what will happen. And I'm just making these things up, and you guys know that. Now, I'm not asking you to be that fast a trader. I don't want anyone to be that fast a trader, but at least if we predicate, you don't have to be. You set up the trades, you sit there, and you sell at will. Remember that old saying on Wall Street, which I will always agree with: sell when you can, buy. What's that saying, Paul? Don't sell
Buy
when you
low.
have. You know that old saying. What's it? Buy. You know what I'm talking about.
I don't know. Buy low, sell high. No, you're thinking of something else.
No, I know. No. It's coming to me. You've heard it too. It's a very common saying. It says, sell when you can, not when you have to. Remember that term?
Yeah.
Yeah, exactly. So if you want to shoot fish in a barrel, which is a terrible thing to do, the poor fish, right? In a barrel, you're just shooting them. The thing is, it's really bad. But anyway, so sell when you can, not when you have to. So if you set up trades at these type of levels, and I'm talking on a short-term basis, then you sell at will, profits at will. Okay? But if you're buying here, and you're in a tricky position because right after that, the markets pull back. So you need to set up, not necessarily exactly at the bottom, but more so at these tactical buy regions that I keep on pinpointing, instead of putting your luck and shoving all your money right at this level when the markets could very easily pull back 200 points, just like that. So we are in the business of predictive analytics through technical means, mixing in the other variables, the political and economic, the stuff. But hey, that's what we do. And it makes us a lot of money. So, all right. Let me just cover a couple of quick stocks. And Paul, if you have a question in the meantime, feel free to ask me. Your
Hey, Frank,
Facebook.
can I ask you one quick question,
Yes.
not just on that previous slide there? I just wanted to pick your brain, get your thoughts on that gap there. I noticed a lot of stocks in their charts are showing that same gap. And
Oh, this gap we're talking about?
yeah,
Okay, so
yeah,
here's my thought on the gap. The gap will get filled. The gap will get filled. So this gap is at 3176. We are at roughly 3200. So this gap, so we are 3176 minus 3200 to be exact. That's 24 S&P points, right? On a short-term basis, Paul? And
yeah,
that's a very good question. Okay. You're with me so far, right? So that's 24 handles
yep.
multiplied by the factorial of 8 that we normally use to translate into Dow Jones. So we are looking to be exact at a drop of 192 points on the Dow. In my opinion, that will happen.
Yep.
In my opinion, that'll happen right after Christmas,
And
or
you were saying, and I
before
agree with
Christmas.
your, yeah,
Go ahead.
what you were saying earlier, Frank, is
Yes, sir.
the December dips will get bought, and I think that would be a good potential buy point. We'll have to see what happens, but
I absolutely agree with you. But remember, the latter part of December, going in towards the 31st, there's a lot of technical, and you being in the business, you understand that a lot of technical rejuggling of portfolios, adjustments and stuff as we get into the year end. So the last couple of days of December are extremely volatile and could open up to be a sell move. You understand what I'm saying?
yeah, we got a half day there with New Year's Eve, and
That exactly, and a lot of portfolio adjustments from big institutional money managers, whether it be tax loss selling or this or that, or them just removing. Now that doesn't apply. That will apply to the overall market, but not necessarily to every stock. So that's the whole point. Some will be bought, a
yeah.
bunch of them will be sold. Yes. So it's a very turbulent time. Good to have more cash. Be very selective, and that's the way I look at it. Now
And that's
regarding
your.
yeah, go ahead.
Oh, Frank, I was just going to say that's what volatility does a lot of times, doesn't it? Is it rotates into different sectors?
Absolutely. No, but sometimes volatility doesn't just rotate into different sectors. Sometimes they just go straight into cash,
Right.
into the money market account. So like I said, the last couple of days of December, and it's a very good question on your part, is in my opinion, is a point of high risk and volatility, not from the overall directional bias of the market, which I'm showing you is higher. This is the IWM, for example. So much room to move. The S&P 500, I'm showing you, we are getting severely overbought at 32.27, 32.30. We're hitting the upper end of this channel that started all the way down here on July of 2019. Look at the monthly chart, a weekly chart. Oh my God, are we overbought? Look at the distance from the 50-day moving average. That's all you got to remember. The standard deviation right now is approaching almost +6. I mean, come on. Can it stay above for a couple of days? Sure. But does it have to come back and get back to normal levels, move closer to the highways of the 50-day moving average? Oh, believe me, it will. So what I'm saying is the latter part of December, the last part of December, a couple of days, is going to be extremely volatile, primarily for technical reasons, portfolio adjustments, all kinds of stuff. So again, and the longer term picture doesn't change. So even if you pull back, let's say 300 points, this candle will still be green and right there at 31.71, or maybe, maybe testing here at 3,000.
Yep.
It's going to be one red candle like this. In my opinion, it'll be fast and furious, and then they'll buy it. But we'll have to watch that. If the technical underlying scenario on the stochastics, the McLaren oscillators, the MACDs, all those other things that we look at start to deteriorate, then no point in being a hero. The markets are real, excuse my French, bastards. They will pull the rug short term, whether it's for 1 or 2 days. Hey, did that for how many months? 2 months they did that. Everyone just lost it. October and November. Even I thought we were going to come back and retest the 21.72 level, but no, it bounced off hard. Starting the month of December. Well, that was the December 24th Christmas Eve massacre, and then January, and this is what we did. And then we sold off like a monster. That was a very negative candle, which told us that we could have come down. We could have slipped more on May, but no, in June we picked up and ran, and this was a small one. So we could get one of these small ones very quickly, Paul, and that's a very good question on your part. And this small one could be good for 600 points. All right, so just keep that in mind. I'll try to I'll not try to, I will notify people, but I like to keep a little bit more cautious as we become more and more overbought. But I'm not in the business of putting out some macro hedges, in other words, some big shorts out there, which we have done in years past, and go away at night saying, oh, I know the market's going to go down. No, not ready to do that. And why not? Because if you did that, you'd be losing money like nobody's business. Look at the market. We have one of the last things that I'm going to talk about is somebody said, well, why do you think this is going on? That would be the question from a novice investor or a trader. It's going on because of something that I talked to you guys about many months ago, many weeks ago. Massive chasing by underperforming hedge funds, mutual funds, institutional fund managers, and retail emotional traders who are finally getting into the market. Mom and pop is not come into the market. They're still kind of twiddling around, going, should I buy that Facebook? I never bought it when it was at 140. Oh, it's at 206. It's really high. Facebook is going to go to friggin' 300 in a year's time. Just to pick an example. So they'll still be saying the same thing. Human beings are stubborn beasts. They are mostly in denial. They don't like self-criticism or constructive criticism. And that applies to all traders too. So they keep on making the same mistakes. So let them stay away from the market. I don't care. There's still, yes, money has started to flow out of the bond market into the stock market. But what about new money coming into the market? The other thing that will stop the ascent of the market higher is a drop in corporate buybacks, because the biggest buyers of stocks over the last 6, 7, 8 years has been corporations buying their own stock back, corporate buybacks. When we start to see signals of that happening, the market will stall. So I'll keep an eye on that. And you guys keep an eye on that too. So bottom line is that when it comes to these type of stocks, I'll take full credit that even though I did not hold it all the way from down here, but we traded it like a beast back and forth, is Tesla. This type of technical breakout only happens for one reason, and this happens to a lot of stocks these days, Tesla being the ultimate flagship stock, and that is called a monumental epic short squeeze, because so-called smart money is dying. So-called smart money who has shorted the crap out of Tesla. You couldn't hear one good word out of Tesla, from CNBC, Fox News, Bloomberg, or any other channel out there. Oh, Elon Musk is this. Elon Musk, called that guy a pedo. Who cares? And then the guy lost the case. In the heat of the moment, you insult somebody, you call them a name or a four-letter word, and they take you to court for a multi-million-dollar lawsuit. I mean, it's frigging laughable. Tesla's manufacturing cars in China. Their cutting price, the Shanghai plant, which they talked about many months ago, is fully open. U.S.-China trade deal, congratulations, President Trump, is being signed. U.S.-China phase deal 2 will happen, in my opinion. Markets will open further. Tesla's business, in my opinion, is going a lot higher. Mercedes just pulled out their hybrid car out of the U.S. because they can't keep it. Tesla is the biggest mid-size sedans, I believe, highest selling ever. Did you ever hear about that in the news? No. Do I love Tesla? I don't even crap about Tesla, which I said many times before. I hate driving those cars. They don't even make a sound. I mean, I'm very old-fashioned. Give me a V8, V12, V6, powered gasoline engine. I mean, that's what I need. Well, I'm glad that people are buying Teslas and other hybrid cars, environment cleaner, all that good stuff, so that's fine. But stock, look at the megaphone pattern. It is over that. This is serious stuff. There are massive multi-billion dollar short squeeze in motion as we're making money on the stock. Thanks to me, I will say that very clearly. Okay, thanks to me, I kept a lot of you in that trade. And psychologically, it wants to go to 420, which was a chart I put out on Tesla many months ago during the time that he tweeted that, what was that tweet, Paul, that he did, and he got into big trouble, that deal done or something, financing available.
Yeah,
Famous tweet. Yeah, that they were, that the Saudi government was going to basically, I forget the name. I mean, the term that he used, it's a classic. I can Google it. He said, like whatever, financing
funding
available.
secured.
Yes.
Funding secured.
Funding secured.
Yeah,
Thank you,
right.
sir, for taking me out of my misery. Funding secured. He got into trouble. The SEC sued him. Blah 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 blah. So, funding secured. I had a chart before the funding secured thing, and I have every single one of my charts on Dropbox. So anyone who wants to look at it, you can tell me. I'll give you access to it. You can look up charts from a date, like it's amazing. It's like a running encyclopedia of the market. I had a chart, Paul, of Tesla showing that it was going to go to 420. I believe it was based on a line like this, right there, line like this. Okay, and he said, he said funding secured, and 420 or whatever, that's a pot term, I guess, and that's exactly. And guess where we're going? Psychologically speaking, we're going to go somewhere close to 420. It's just bizarre, but that's the way it is. But from a technical standpoint, this is a significant breakout, short squeeze or not. I mean, you got a massive. It's 180 if you want to look back at it on a multi-year basis from 2017, ladies and gentlemen. So listen carefully. I know many of you already know that, but 2017 to 2020 January coming up in a couple of days. This range is 180 to let's say 380. That's 200 points. So if we extrapolate out that what will happen to Tesla over the next 2 years, because this took 3 years, let's say over the next 3 years, well, the stock is going for 380, add 200 to it, the stock is a $600 stock. And you know what? It's probably going to happen. It's probably going to happen. If Tesla just spins off SpaceX, their ultimately super successful private venture, space venture, if they just spin it off as a public company, right there, Tesla stock will go up another $100.
I'd be in on that.
Unlocking value. What was that?
I'd be in on that IPO.
Yeah, exactly. But you would be on Tesla too, because Tesla stock will get a huge bump. It's like Amazon, if they decide one day they're going to spin off AWS, their most profitable unit, component, which is Amazon Web Services. The storage, that's like a world's largest disk drive that everyone stores their data on. Imagine Amazon stock will explode. So you always have to look at the parent company spinning that off. You know what I'm saying? So
Yep.
yeah.
And Frank, I can testify, of course, that anyone could watch your videos, but you got way ahead of that chart. And there's another one that you got way ahead of that just made
Which
mountains
one?
of profits. NVIDIA is doing exactly what you said it would do. And we
Oh
don't
yeah,
have to
yeah,
look at it right
yeah.
now, but I just wanted to know your
Sure.
probability, Frank, if it's obviously been running really hot lately, but do you
Yeah,
think by first week of January it's got a chance to hit 250?
yeah. Now this is the unconstructed chart. I don't know why with the constructed version is not here. I know I have it in my other stuff. Let's look at it very simply. Yes. Your first answer to your question is yes. 250? Yes. In my opinion, yes. Here was the trading range that we were talking about. I explained to people, and I'm showing you this on the back of napkin, like, having a beer with me, like, that type of conversation. Hey,
Yep.
what do you think the stock will go? So I'm going to explain to you. 100, 140, 60-point depth, right? So 60 point is the depth of this thing. 200,
Yep.
add 60 to it. Simple. And believe me, these things work. It's 260. Yes, in my opinion,
All right.
250 is almost, I hate saying this, a no-brainer. Almost a
Yep.
no-brainer. Now, NVIDIA, we traded well. I have NVIDIA swing calls from months ago. I don't even look at it. I don't trade NVIDIA every single day. One of the other ones which I told you guys to buy, which delivered hundreds and hundreds of percent of return, AMD. Okay, and I was late in the game on AMD, still going higher. Micron delivered the goods today, and Micron, in my opinion, is a $60 stock. But in answer to this, I would say that here was a major support level on Nvidia going back to 2018, and that is your 250 level, sir. So yes, do I think that it can go to
Yep.
250? Absolutely, absolutely. Now, let's take a look at the monthly chart. Let's take a look at the monthly chart, because it took its sweet time breaking out of this range, even though this range itself, from a trading perspective, was quite 200 and 140. From a trading perspective, was quite lucrative, but now it's broken
Yep.
out. So all it's really done, and this is the simplest way that all of you should look at, and thank you for the question, sir, is that is instead of the usual commentator from TV or the average bear on the market will tell you, oh my God, the stock's gone from 140 to 236. What are you talking about? Trying to put on this, your New York Mafia thing going on here. So, but as a tactical trader, we're like, no, sir, relax, sit down, smack yourself on the back of your head, and ask yourself, it's not that the stock has gone from 140 to 236. The stock just broke out of the $200 range, which it was at back in April, which it broke down from back last December. So, in other words, the way we look at it, and I believe that applies to the markets and everything, is we're not looking that the stock was at 140, should not have been at 140. For whatever reason it was, market conditions, loss in Bitcoin mining and all that stuff. That rally just began in the month of November from approximately 200 and change. So we are just slightly higher. So if you look at this as your starting point, then the 250, 260, 280, 300 level is very doable. Why not phase two deal in China? Well, they criticize phase one like it was a joke, right? Paul, we know that. Like, oh,
Oh
you
yeah,
see
for
that
sure.
on stock taste, like, yeah. Told you it was going to get done. Phase two, in my opinion, trade thing will get done. Yes, in between, there'll be rumors out of South China, Morning Post, Washington Post, New York Times, even Fox News spread rumors. Unbelievable. Okay? Like, oh, sources tell me that these people are walking away. Oh my God. I tried to keep you guys on track by saying, guys, rumors, rumors. You know, it's like adults are the most susceptible because we live in a conspiracy society. Like, oh my God, so it's just like, relax. We're moving forward. China got hurt really badly. We got hurt to a certain degree. And President Trump is being practical and he's got great advisors. So, yes, there will be certain times, there'll be tweets from this side, comments from the other side, blah, blah, blah. But on a longer term basis, NVIDIA is another one of those stocks that I've talked to you guys for months now that is so far from the highs from 300. This is not like chasing Apple for $3 more. This is a stock that has room to move up to $300 and complete the pattern. At this point, you can say, yes, we are technically really overbought. So yes, in answer to your question, it can go 250. Now, stock like, just want to show something to you, is Tesla. I showed you, like Amazon. Now, Amazon is intriguing because there are certain hedge funds which are, because of Amazon's lack of performance, are in the business of doing some year-end selling, in my opinion. And that is fine and good. That's what's keeping the stock down. Yes, we have had some big moves on Amazon. I like to play the cheap lottos within the range, and those have paid off very well, but you have to be rather quick. This stock is stuck in a range. That range on the highest end is 1850. That range on the lowest end is 1700. Ladies and gentlemen, this is a 150-point move. It is clear as day. So intraday moves up 15, 20 points. We take our profits. Boom, it's down $3 at the end of the day. You're like, why? Well, welcome to the joy of the stock market. That's the why. All right. There are some big hedge fund sellers in Amazon which are suppressing the stock. Right or wrong, I don't care. I'm a trader. All I know is the stock has the upper end of around 1870, 1820. The last calls I told you guys to buy at a buck and change, we sold it at higher than 4. To me, that's fine. I'm happy. So bottom line is, you need to be more of an active chart trader in order to trade Amazon. You want to look at Amazon from a fund perspective, like as a fund manager, then you should be looking at the upper range, 1850, on some great news or the stock being bought heavily, and it's going to happen very quickly. That I might tell you, because this is the most undervalued, in my opinion, from a price standpoint, FANG stock that's out there right now. All right.
Yep.
So saying all that, the range between 1800 1850 very doable. On the low end, 17 to 1750. We're right in the middle of that. Looking forward, and I don't know if it's going to happen yet. If we break out of the range of 1850, the stock will move so fast, so furious to close this gap at around 1915 to 50 to 2000. Keep in mind that the biggest of the biggest Wall Street analysts, and those guys do have power. Okay, we have to admit that, have targets of Amazon past 2000. So this is another stock that we need to keep an eye on. Just for the heck of it, maybe you want to buy some, don't go too crazy, like February or March. Maybe I'll put them out tomorrow. Because Amazon calls are expensive, so there's some premium built in there. Maybe you want to buy some 2000 or 2100 strikes, 300 points higher. I bet you they'll be expensive too if you buy time. In other words, if you go out into February and March. Whichever the case, this is another one that is still stuck on the lower range, which is very, very, you can see that very clearly. But you, as an active trader, you can trade it for a bunch of points, like sometimes intraday or intra-week. Let's take a quick look at Facebook, Paul's favorite stock. Congratulations.
Absolutely, yeah.
Yep, absolutely.
Hey, Frank, I was going to say on Amazon too. I just going to say from a fundamental perspective, you got to think.
Go ahead. Hello, Paul, you got cut off.
Oh, sorry. Hey, Frank.
Yeah, go ahead.
Just on a fundamental note for Amazon, you got to think they're going to have a great ER with the unemployment level and the record economy. I just got to think they're going to have a blowout ER too.
In my opinion, they will. Right now, Amazon's being held down purely for technical reasons. There has nothing negative.
And that's a long way away. That's a month and a half away too.
Yes,
Yeah.
exactly.
The ER is
Yes, I'm just saying that right now, like I said, the simplest reason the stock is being suppressed is because hedge funds, which the stock has underperformed to a large degree versus their peers, that they are buying those, what we call window dressing for the last part of the year-end chase, to where you're adding alpha, in other words, fast-moving. I'm sorry, you're adding beta, fast-moving volatility on stocks like Facebook, Netflix, Tesla, and stuff like that,
Yeah.
in order to add alpha, i.e. excess return. So Amazon is not a candidate for that, but it could just wake up and run like a monster. This is really the big picture of Amazon going back to the middle of this year. So we need to have a breakout of here. So if somebody who says, I'm going to wait out for the breakout, I said, okay, that's fine. As traders, I look at the internals. Everything is going well despite the intraday volatility. Look at the internals, still going very strong. Let's take a
Yeah.
look at the oscillator, still going very strong. Let's take a look at the MACD. I'm liking it. We're starting to see this little green shoots appear. So,
Yeah.
like I said, this stock is a little bit of a sleeper for a couple of days, but once it break out, it's not going to be like, oh, see you later. It almost started to do that a couple of days ago, 2 days ago. But then
Yeah.
this is what it looks like. So I like the chart. I like the chart because nothing here is telling me that anything underlying is falling. If we look at the weekly is kind of meandering. Okay, uh, forget the external picture. Let's take a look at the internal. See how it's kind of going up, but then it's pulling back a little bit. What we need to see on the weekly is something more like this, and that's when you can chase the stock just the way we chased and bought earlier on Netflix and and Tesla and Facebook and stuff like that. So last stock that I'm showing from a large cap perspective, and then remember, we have a plethora and a fantastic selection of stocks, but I don't have time to obviously spend it tonight. You just need to basically, all of you need to basically look at it on my Twitter feed. You have enough fantastic ideas out there. For you to, fill up your books. And remember, you want to participate. I know not everyone can participate in every single idea. Just by one call, leave it in there. That way it forces you psychologically to track that stock, to understand more about it, read up on that company, follow the news, do some due diligence on your own, and that's how that really helps. So always, like I say, always tell people, especially for newer traders, just by one call, and that one call could turn out to be a buyout, and then all of a sudden you're just you made an 8-bagger, because a lot of my companies do get bought out. So that's the way you do it. You don't have
I think
to
that's great advice, Frank.
yeah,
Just
because
owning a little bit of just a little bit of skin in the game. It just keeps you vested in
always.
watching it, and
And
yeah,
honestly speaking, Paul, it's the simplest advice. Let's say you want to learn about a company. Is it about looking at it, reading a investor's business daily? And say, no, just buy one share of the
yeah,
company. Just buy one share.
yeah.
Just buy one
And then
share of the
naturally, you'll
company.
you'll you'll know when it's oversold naturally because you'll just say, hey,
Totally,
that's the
because
you
you
do.
will look at
Yeah,
the charts when I'm updating it.
yeah,
You will look at it because you have an interest in it. Okay, like
yeah. That's
this stock,
fantastic.
which I think is going to be, which already for us was a monster winner, KRTX. Actually, let me just that's the last thing I'll cover. I own a bunch of shares. I didn't put my whole book in it, and I know, my opinion, that stock's going to be up like literally. I mean, it's already today alone. It was up $10. Okay, 14%. Come on. If I was just an average trader, I'd say, hey, I did my job. I gave you one um, recommendation out of many. And that one recommendation on the stock side, because it doesn't have any options, KRTX, Karuna Therapeutics. Last time I told people to buy the 70, it went to 150 in 24 hours. Okay, it's crazy stuff. Doesn't matter. Pulled back into the 60s and 70s and said, let's go buy it. Now it's heading into the 80s. Two major analyst upgrades. I'm giving you, it's already on my Twitter feed at 126 and 140. And these are not no name like BS, Wolf on Wall Street type of firms. You're talking Piper Jaffray. You're talking Stifel Nicholas. You're talking serious companies. And they have $130 price target. Stock sitting here at 75. No options though, only stock. So buy one share, buy 2 shares, leave it in there. At least it forces you to track it, learn more about it, and in the meantime make money. And if it goes down, you don't hurt much because you only have a few shares. Same thing with options. Own one call of a stock that you think might go higher. So Facebook is a serious movement here. We are broken out of this level, which is significant. I'm actually looking at the weekly chart for the first time in many weeks. Right there, 205. I told you the stock would go to 205. It is at 205 right now and breaking out. This is significant, very significant, because if we break out over this level here, this was a beautiful cup and handle, which took many weeks to develop, I admit, but the stock slowly and steadily gone up. Here's your cup, here's your handle for 2 weeks. Now we have this cup, handle, and now we're breaking out. There's your bar. Breakout of the stock will take it to 220. Over 220, I have no idea where the stock's going. Oh yeah, I can project where the stock's going. In fact, I can project on a back of napkin thing, type of calculation. I'll just simply draw a line. And what line do I draw? This. Oops. It projects out to like 230. Right there. There is Facebook for you. You don't need some big shot Goldman Sachs analyst to tell you. I'm telling you the stock's going to go to 220 and possibly to 230, where it'll get extremely overbought. It is short term, quite overbought, but all technicals are pointing higher. So dips can be bought, period. So last one I'm going to show you, which is a serious company, schizophrenia, world's only schizophrenia drug that is going to be fully approved by the FDA shortly, KRTX. You ask KRTX to any of your buddies, they're like, what are you talking about? Karuna Therapeutic, what is that, a Hawaiian company? That's what they'll say. Well, you'll say no. We'll say, hey, join Clueless Trading. The guy told us to buy it when it was breaking out. Not here. I mean, I wish I told you guys to buy it at 30 and it went to 151, in which case you would still have people who'd be sitting on the sideline. So what does it matter? I saw the stock move hard. We got in around this level. Guess what happened over the next 2 days? The next day, actually, the stock went to 150. Did I ride it all the way from 60 to 150? No, I sold it along the way, bought it, sold it, so made some decent money. Stock pulled back. This is a beautiful chart, and then it created a nice, you might call it a bull flag. So now he's trading within a range. What's the range? Lower end of the range is 63. And this chart is not new. I've shown it to you guys. And the upper end of the range is 88. Can you not trade 20 points? Just buying 20 shares maybe? That's 400 bucks. How about buying 200 shares? That's $4,000. Don't go crazy buying 2,000 shares. Yeah, maybe you can. With a stop loss, why not? You make 20 points on 2,000 shares, $40,000. Is this rocket science I'm explaining to you guys? I don't think so. All I know is the stock's looking good. Analyst is behind them. Real company, world's only viable schizophrenia drug. Hopefully gets approved by the FDA. The stock is going to go to 120 in like 3 seconds. Why? It's heavily shorted. And more importantly, there's no options. You're forced to buy common. So you can play the stock on a secondary basis by buying options, cheap options. You have to buy the stock. The float is tight. That means there's high demand for the stock when it moves higher. So in my opinion, the stock is going to 100. On that note, Paul, thank you for your great questions. Referrals are always welcome from everybody. I hope everyone found this helpful. Let's have a solid end to the year. Ups and downs. There is always, I want to remind everybody, ladies and gentlemen, there is always risk in the markets. The markets are known as risk assets. I didn't make that up. Okay? That's why you say risk on. That doesn't mean like stay away from the market. Risk on means are days that the stocks are higher, and risk off are the day bonds are higher and stocks are lower, right? I don't make those terms up. That's the way it's looked on. So if you're going to involve in stocks, both in stocks as well as options, which are far riskier, high risk, high reward, you have to embrace risk. How do you embrace risk without being scared every single minute of the day? Tactical charts produced by Clueless Trading. On that note, have a great evening. See you guys tomorrow. Thank you, Paul. Appreciate it.
Great stuff. Great stuff, Frank. Thanks.
Thank you. Spread the word out there. Bye-bye.
Absolutely.